Hey, what's going on, team? It's Ricky with TechBud Solutions, and a really good question that I got asked over the weekend is why there was a lot of buying pressure in specific stocks for no apparent reason, and then on other stocks, they weren't reporting any bad news, yet there was a lot of selling pressure for them. For those that are a little bit newer to the channel, my name is Ricky. I upload new videos every single day about the stock market, and I hope that you learned something new, and if you do, please consider dropping a thumbs up. So quickly wanted to update you with where the market currently is at. One of the first things I want to talk about is the quick little pullback. And this kind of goes hand in hand with what we're going to talk about today. And that's the idea of, what was Friday? Friday was March 31st, right? It was the last day of the month, but most importantly, it was also the last day of the quarter, right? So we saw even, excuse me, with a lot of banking institutions, there was a little bit more selling pressure than normal. And you might be asking, well, why is that the case? I thought, banks are sound and resilient, according to the Federal Reserve. I mean, market is rallying, right? Because it's to be expected that the Federal Reserve is going to lower interest rates, making it less expensive to borrow money. Now, that means that these banks should be making more money, so these bank stocks should be going up. But one of the things that we want to talk about is what happens on the last day of every quarter. And it's simply, a little screenshot is taken for pretty much every fund manager out there. These are people that manage either, hundreds of millions of dollars or tens of billions of dollars, right? And because of this little screenshot, again, it just takes a little screenshot of all of their holdings. And if whatever stocks they are invested in are still being held and those stocks are horrible performing stocks for the quarter, then it doesn't look the best on their behalf, right? So this is why normally on the first of every quarter and on the last of every quarter, you begin to see these quick changes of kind of volume, right? Because everyone on March 31st that has been holding a stock that hasn't been performing the best for that specific quarter doesn't want to be, in a sense, screenshotted that they're still holding that same security that is not performing well, right? And it's not that there's anything wrong with holding it, right? Because a lot of these stocks that are down might offer huge upside, but it's what that screenshot looks like to the average investor. Might not be the best looking thing, right? Oh, they're holding a very, bearish stock. That stock is down, let's say 20, 30, 40% year over year. Maybe this isn't a banking institution or a fund that I want to invest my money with, right? More clearly, they probably sold those shares of stocks that are down 20 or 30% and probably bought anything like Facebook or anything tech related, because as a lot of you guys know, tech is up in 2023 in comparison to versus a lot of other, publicly traded companies out there. So what I think that we'll see is we saw a lot of selling pressure for companies that didn't necessarily deserve all of that selling pressure. It's just more on how it looks because of the expectation that is set for every fund manager out there. I think that we'll see that buying pressure come back for those same securities that offer huge upside, but maybe just haven't been performing the best recently. And I think that we will see more selling pressure on those tech stocks that have been performing well, but maybe long-term are not expected to perform the best, right? So it's the idea of how it looks. It's all about the perspective, right? When these screenshots are taken, again, it's pretty much just a recap of like, okay, well, this fund owns these securities, and do I want to invest my money with that fund? If they see that they're holding securities that have been down for the 2023 or for the past year, then obviously it doesn't look the best on that behalf, which can lead to more selling or more buying pressure in a very short period of time because of how it looks for these institutions. Now, it's not anything crazy, as you can see. I mean, market is down a little bit. These are the NASDAQ futures. It looks like we pulled on back from highs of 13,300 down to around 12,050 is kind of where we're teeter-tottering at right now. But we will only see, right? Time will tell. As of right now, if the market were to open, TQQQ would be down 1%. SQQQ would be up 1%. But again, that doesn't really mean much because we've seen it many times that the NASDAQ market can be in the red right now, but by the time the market opens tomorrow, it could have fully recovered. So overall, I'm very excited. I just wanted to give an explanation. I was going to type this out in a message, but I felt like it would have been it's more easy to understand if I just explain it in video form, right? So wanted you guys to have a better understanding on why you're seeing maybe a little bit more buying or selling activity in just the past day, and it's just because of how things might look, right? If I'm not mistaken, March was one of the best months in quite some time, and the quarter that we had was one of the best quarters since 2020, to my understanding, especially for the NASDAQ and the S&P 500. So very excited to follow up. We'll see if the market continues to rally and or if we begin to pull on back. But nonetheless, again, one of my big lessons learned from last week is how important it is just keep your trading simple and to pay attention to overall just market direction, right? I made a lot of mistakes last week, just really making my trading more complicated than it needed to be. I viewed the market to be overbought, and that was my opinion. My opinions are not, factual. They're just my opinion based off of what I think the market should be doing. I think it was just a very difficult thing to accept that with banks nearly failing that the market was beginning to recover. But again, it doesn't matter what I think, and I need to remind myself that. So market direction is key, and instead of fighting the market's direction, I either go with it and or I should just stay cash, right? So that's what I'm excited to kind of work towards this week, and just keeping my trading simple and not overcomplicating it with all of my opinions, right? So I do appreciate you guys' time. I'll see you tomorrow at Market Open for our live trading session. And friendly reminder, if you want to watch me trade live as soon as tomorrow, I do it every morning with our LPP team. And if you want to see if it's a good fit for you, again, I'd love to have you so you can watch me trade live. That's that second link in the description down below. And don't forget to enter our GTR giveaway. And that's that fourth link in the description down below if you want to learn more about that. If you have any questions beyond that and I don't respond to your comments down below, then shoot me a direct message via Discord. And that's that first link in the description down below. I appreciate your time. Like always, let's make sure that we end the year on a green note. Take it easy, team.